Good morning. It's Friday, June 27th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So what the heck happened to the metals here in the overnight session? Because yesterday we were looking great. We had platinum moving up. We had copper moving up. Silver was able to recover. We've got the expiration of July coming off the table. We had those options expire as well. Gold futures have been hovering around a critical level of support, a pivot point right around that 33 level, trying to work its way higher. And then you get the rug pull, and the rug pull was China's industrial profits. They slipped 9.1% year on year in May, exceeding the expectations of 0.3% decline due to the impact of the trade war. Well, I can tell you this, we just signed a deal 2 days ago, and they made that announcement yesterday with China. Well, if it's behind us, the trade deal, they can't blame the impact of the trade war going forward. So what's that tell you? The potential for those industrial profits to increase from here. So maybe we're seeing a small hook low in a lot of these metals markets. Call me optimistic here to the upside, but that's just the way that it seems. And we'll have to look at the expectations for the data coming out from China. And why is China important? Well, they're one of the large consumers of copper. They've been a big buyer of the gold market. They utilize a lot of silver for their gadgets, for their production of different things. They're trying to make things like this and other things like that will have silver in it and send it over to us. So looking at the equity markets here, June's been a great month for the stocks overall. The S&P 500 and NASDAQ and also the Dow are up 3.9%, 5.5%, 2.6%. So it's been a welcome reprieve since the volatility that we've seen in the previous months here, specifically April. And the S&P 500 had its best May in 35 years. So if you need help on the wealth management side, if you have an equity portfolio and you're having trouble juggling some of these names and you feel like you're missing out on some of this upward momentum, well, that's why we have a sister company, Blue Line Capital here, spearheaded by Bill Baruch here, the Chief Investment Officer, who's oftentimes on a halftime show. Every other Thursday here, he flies out to New York from Chicago and he sits down and he lays out some of the details of some of the moves in the active management strategy we have. So it's not very stagnant like your old school advisor putting you in mutual funds and talking to you once a year. So we're pretty active over here and a lot of people really enjoy that. So looking at that overnight action here, we do have stock futures edging higher, buoyed by that news that the US and China have signed a trade war truce. The positive move has helped the expectations for Fed rate cuts, and a better than feared outlook from Nike and some equity flow data has really got the equities continued to push higher. So the S&P 500 up about 0.25% here, closing just below its record high, while the NASDAQ continues to make new record highs. The risk-on mood can be seen in the other markets. Some of the safe haven assets are getting a bit liquidated here, with gold futures sliding just below that $3,300 an ounce and treasuries falling for the first time in a week. So China did confirm the details of this trade framework here with the U.S. here, echoing U.S. Commerce Secretary Howard Lutnick's earlier comments about the agreement. So the Treasury Department also announced a deal with G7 allies that will exclude U.S. companies from some taxes imposed by other countries, and then also removing that revenge tax that is proposed in Trump's bill. Basically, the revenge tax is they're buying certain assets and things like that, like treasuries, and they are not getting taxed on any of those payments that they're receiving, and they wanted to tax them on it. And it caused a lot of rhetoric and a lot of instability in some of our debt markets. So looking at volatility, because the VIX has signaled a lower low, so you're seeing all the shorts being covered in the equity markets on all your small caps and things like that. That's where the Russell started to push up again. The Russell's still in correction territory, down about 12% since its all-time highs, and it's really the lagger because 80% of those companies are non-profitable companies that are extremely impacted by tariffs, by inflation, by higher borrowing costs, you name it, there's a lot of problems with these particular companies here. Now, we will also have inflation data coming out. We'll have more discussion about some of the tariffs, but I told you that with equities near all-time highs, I find it very tough for the Trump administration to all of a sudden pull the rug and flash the S&P 500 down to those April lows. It would just be very detrimental, especially when you start getting into You're going to have more elections and things like that. And that's where you're going to need to see a really feel-good environment as far as the economy is concerned. Now, speaking of the economy, the U.S. Bureau of Economic Analysis releases the personal consumption expenditures data here, and economists are forecasting a 2.3% year-over-year increase. Why is this important? This is the core PCE index. It excludes the food and energy. It's expected to rise 2.6% compared to 2.5%, with the annual change of the core PCE favored to hit its lowest level since March 2021. This is where, if this data comes out weaker, Trump's going to call Powell stupid and then really demand for his replacement, and expect that he cuts rates on Friday here today. So looking at the copper market and shifting gears over to the metals, I already discussed why they sold off a bit, and then you're going to have some profit take place in like things like copper, in like platinum. The silver market's just been chopping back and forth, trying to decide which hat that it wears here. Is it going to be connected to the gold market? Because I hear a lot of you gold bugs and silver bugs, well, gold's going up, so silver should be exploding too. And then you get copper and platinum going up, and then silver should be going up too. So it can't have it both ways. So it's going to have to wear one hat or the other. And the reason why it gets hit 90 cents is you get the risk on vibe in the equity market. So you get people not needing that gold futures. And then you get the industrial metals kind of coming off because of the Chinese data. So that's going to weigh on the silver market too. Don't call me a bear on silver, because I've been very vocal recently that I believe that it'll break out to the upside. There's an upward sloping trend line. And I think that $40 will become a self-fulfilling prophecy, call it. So, but we might have some backing and filling that occurs as that setup continues to kind of unfold and take place here. The critical lines on silver are really that 37.33. That's been the recent swing high breakout over there. Then you could see, it would have been great if we would have had that Chinese data come out in line with expectations. We get to that level here today's session, and then what will happen is all the chatter and all the rhetoric will say, hey, we're going to have a silver short squeeze over the weekend, and then Sunday night we should probably pop, and then what'll end up happening is all the futures traders will take profits, and then the retail investor will be left scratching their head because they don't have a futures trading account, so they can't capitalize on that kind of gain over the weekend, and then you end up unchanged or slightly lower on Monday. It's just the way that the cookie crumbles with the retail market here. But unfortunately, we had the weaker Chinese data, so market comes off, and now we're critical level, not at the critical level of support, but we're working our way down here. It's like 35.59 to 35.30 is where that level of support is, and then 35 is kind of your line in the sand. You break there with any kind of momentum, we're probably going to go to 33.50. That's just the way it is. So looking at copper, slightly lower. We've been talking about copper for months now. Spot copper contracts and LME are trading at huge premiums to the later dated futures. Okay, you guys always want the silver squeeze. Well, you get the copper squeeze. Copper squeeze has been going on here for quite a while now. You've had plenty of opportunities to get involved with the copper market. I've vocalized the copper market, I've vocalized the levels in the copper market as well. And you look at copper here, they do have a mini and a micro contract on copper. My phone is blowing up because of these metals markets here. People wanted to get involved. So looking at the surge here, of the talk about potential tariffs has caused a rapid drawdown of the LME, and China is moving a lot of that copper over to them to try and front load any proposed tariffs. So we'll see if they get some reprieve as we get more details on these trade agreements and things like that. You go to the gold market, it is heading for its second weekly consecutive loss here as the U.S. gets closer to these trade deals with China and many other partners. You also get the ceasefire between Israel and Iran. And I can tell you there's a lot of agreements that are going on in the background and a lot of negotiations between the U.S., Israel, and Iran in talks about allowing them to increase their exports on oil, take off their tariffs on there, help them build a nuclear program, and also provide them with cash and things like that. And why would they be doing that? Because clearly I think that there's a regime change, because you can't negotiate with the old party, so they must be talking with either the military or something like that as far as having a shift over with some new personnel that are in charge of Iran. That's just my speculation here because things have gotten way too nice over there all of a sudden in a 24, 48 hour period. So shifting gears, that's all my opinion. The ETF flows here, exchange traded funds added 161,000 troy ounces of gold holdings previous session. They also added 1.59 million ounces of silver. So silver, they've been relentlessly buying recently. And if you look at silver up 7.7%, adding, and also on the gold market, they've been adding. So we're at 9.1% on the ETFs. You look at platinum. Platinum was getting short on the ETFs, negative outflows, and a big reversal yesterday. We're positive 0.5%. What's that tell you? All the shorts had to cover in the platinum market. So you get the gold-silver ratio working its way down to 91-1. You guys got any questions? Give me a call. Be heading back Monday, probably no metals minute. I'll be flying back to Florida, and then maybe I'll do one from the airport, like a YouTube short. And then again, you got any questions? You want to open up a future trading account? Because I think that these Sunday night, volatility is definitely going to continue to occur here. And I think that, if you're a believer in the short side of the equity markets, the easiest way to do it is with the mini and the micro futures and options. So if you want to hedge your portfolio, well, the stock market's at record highs. That's also a great opportunity too. So again, you got any questions, shoot an email, info@bluelinefutures.com, or call the trade desk. Be sure to register for the chart back. We've got a ton of different things. I write a report called The Metals Edge every day. I lay out the critical levels of support and resistance from a algorithmic standpoint, and then also from a technical standpoint, and then break down all the key overnight developments that occur in the metals markets, and then give you a rundown as far as commitment to traders, seasonality, and things like that. And then remember that futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.